Well, matter of fact, it's kind of likely. Yes, Russ, this is considered a calendar spread.
Yeah, and I'm just kind of putting, here's the arch, and the thing is, it wants it to hang around 100. Now the thing is, the reason it's not showing us any P&L here, it's like, it says, well, the most you can make is minus 1,200.
Right.
Well, that's because, remember, it's not showing the rolls. It's not showing everything we've made on the other side. So it's not showing you the potential this can make, because it doesn't know that you've made, that this real price on this is not 475. It's what'd you say, 209?
219 is our net cost.
So if we really had our net cost, our true net cost of this call, which we just went through the math on, and we know it's 219, we'd be long a $2.19 call and short a $1.55 call, and then this thing would push up way up here above. But the shape is the same. It would like the stock to go from on expiration day, which is the 29th of July. We would love the stock to be right around the peak of the profit jump. So somewhere between 99 and 101 would be ideal. And so if the stock kind of stays where it is or creeps a little bit higher, Kev, this position will just love that, and then we'll get to the point where what will we do then? So what will we do when this option expires 7 days from now?
We'll roll it out again.
If the stock is around 100,
We'll continue to extend duration, or we could turn it into a diagonal.
Mm-hmm.
It depends on where the underlying is.
so right now we're kind of going into earnings with a calendar spread on at the 100 strike. Calendar spread on at the 100 strike. So just out of curiosity, where do you think that calendar spread is trading right now? If we just look at what's the real value of the
You
calendar
can
spread?
look at it on the
Let's take a
monitor,
look.
can't you?
So the 100 calls worth 350. Let's just call it 360. We'll round it to 360. Right? And what are the other calls? Well, the 99s right now.
No. You got to go to that.
Oh,
to that.
got to go this one.
Right.
So about $1.60.
It's trading about $2.
Is it? Yeah, let's see. Yeah. Okay, that sounds about right.
Right.
Yeah.
So that the call that we have on the spread that we have on for net price of about 64 6% is trading $2.
It's trading for about.
So we're about 135 10 times.
Again, it's just not being reflected in it because.
So think about this, and for Nick in the chat who's saying, well, with commissions that number will be greatly reduced. Might be reduced by what? $50?
Let's see,
five
we're rolling
rolls?
10 lots, and if you're using a
50,
10
60
lot,
bucks?
if you're on commissions, that's 750 plus 750. That's $15. Yeah. Well, no, let's see, that's 995 plus 750. 16 bucks.
Yeah.
17 bucks. Yeah. If you're on-
But you're up about $13.50.
Mhm. Right. Oh no, yeah, you're still.
Yeah.
Oh, definitely. But again, that's Kev, I know we went through that kind of fast, so I'm going to imagine there's a lot of questions coming through right now.
Actually, everyone's pretty
Are
good
they
about
okay
it.
with it?
Yeah.
Because this portion, I think it's really easy when you go back and you say, what was the original trade? Well, again, the core was replacing stock, basically. And we didn't want to buy stock, so we bought 10 of the October 100 calls for $4.75 and immediately collected 50 cents by selling the short-term call. And that short-term call we did realize, well, not all 50 cents, but we bought it back for free.
Here's a pretty good comment in the chat from Ethan. In these situations, I prefer to simulate the same trade and change the call prices with the real ones, and that shows the real P&L. Well, there you go. You're more high end than I am.
Well, you could do that. You could simulate
Right.
and show the trades.
Absolutely.
And also, what else you could do on the Analyze tab is you can simply add in a trade and say, listen, if you know you're down $1,300, add a buy of 100 shares and a sell of 100 shares, okay, simulated, of the stock, buy 100 shares of stock at 100, sell 100 shares of stock at
Sure.
one.
And you can
130.
simulate the P&L,
And then
right?
you get a simulated P&L. And that will all that will do is just raise this up to being profitable. But we know the shape's going to be about the same. And we know that the profit's going to be about 1,300 to 1,500 right in that range. So that's fine. Okay, so that's kind of an interesting way to look at this. But again, that's when you hear us say that all the time, you can't look at this P&L open number because all it's doing is showing us these two. All right? And those are going to change. If the stock sits here, let's think about this one, Kev, for in the next coming week. Right? So this is what we have now. What potential things could happen here? Well, let's say the stock.
Well, here's the risk. Well, let's go through the risk. What about Apple moves to 105? Right? That would be away from our strike. Volatility would probably come down. and that $2 that is trading there might come down in value,
Right.
right?
Right, if it goes to one.
That's our risk.
Mhm.
Now the good news is about this spread is it's defined risk, so you can't lose anything more than you paid for it.
Right, and right now our net cost is about, what,
64 cents, right?
So that's
So-
our total risk right now.
And you've got 90 days till the October goes off the board, so it's not going to zero anytime soon because it's a longer duration, right? So you would continue to roll, and, oh, by the way, at any point in time, you can take it off. Oh, sure.
Yeah, absolutely.
Right? Before next Thursday and earnings come out, if we're sitting at or near 100 and it's made some money during the week, which it may, you can take it off.
We can take it
in
off
order
right
to-
now. if
Yeah,
we
you
wanted.
could put it in order to sell it, close it out.
Yeah, we can take it off right now if we wanted, but,
May not be the worst trade in the world because if the October volatility goes up at all, right, you could sell out the Vega and make that, just lock in your money.
now ideally what we'd like it to do is when anybody have a calendar spread, we would like the calendar spread to go to the strike, the short strike. And that happens to be, well, the same strike, so it's the 100 strike. So ideally, the peak of that profit dome on a calendar spread is the short strike or 100. So if it kind of creeps up a little bit in the next week, obviously that would be ideal. But we have an earnings number during this week. Remember, just before this option expires with 7 days to go, we're going to get an earnings number. So maybe if earnings are okay, the stock might creep up to the 100 strike. So that would obviously work for us. I'm going to put Apple in there just so we can look back on a daily chart and see what Apple's been doing. And you can see it was back in the early, sort of mid 90s there. Got all the way up, did get over 100, got up to 101 something, and that was a couple days ago. Okay, well, I'm just going to put in where we were a couple days ago when it was trading almost 101. Remember where those calls were.
Yeah.
Those short calls that expired today. Well, actually, we bought them back for what, 5 cents?
The Apple calls,
Yeah.
no, we bought them back for 15
Oh, 15
cents.
cents. Yeah, we bought them back for 15 cents.
I may have pulled the trigger a little early, but right now the stock's rallying, so
Right? No, that's
they're
fine.
trading right there.
And here's what we were thinking, because look, 2 days, here's today. Yesterday, at the high of the market, those were trading,
Right.
it was 101.
That's why when I had a
And
half a
they're trading-
dollar, 56-cent winner, I'm like, you know what?
Yeah.
I kind of like buying these in here.
And I think those calls were trading about $1.30, $1.30, and we're thinking, oh gosh, we sold them for what, 71 cents, and here they're trading for $1.35. And then of course it's dropped this morning down low, and we said, hey, they're trading 15 cents.
Right.
Time to bring them home.
Right.
So we did. And
My profits, we know we've got a big roll to do, right?
Mhm.
Because of the earnings event, and the roll, as SLS has been saying, trading at some really chunky prices. So why not take some profits on the one we sold and move into the earnings week at some big numbers?
yeah, so those 99 calls are hanging on to that value. They're still holding on to 13, 14
Right,
cents.
they're not going anywhere.
So-
Because think about it, if the stock rallies 20 cents from here, those are in the money and trading more than 15 cents.
Yeah, I'm almost surprised they're not more. Because look, it's 98.97. That's 3 cents away from 99, which would put that call in the money. And so they're only, wow, that's kind of low. I'm kind of surprised they're not trading for like 20 cents or something, or 25. But again, 0 days left on that one. But that's okay. We're done with that one. We've realized the gain. It worked out well, so that's fine. So this is going to be a fun trade. And Kevin, now the last thing to think about this is, obviously we'd love to see it be around 100. That'd be great. 7 days from now. But in 7 days from now, this call expires. So
Yep.
what do we do?
We're going to roll again.
We'll go out 2 weeks or 3 weeks
Right,
and sell another one.
whatever we think, yeah. I mean, the good news is in Apple, you can do it relatively often. So
Right.
we're going to continue to lower that cost.
So again, like we just said, this one's going to expire. The one we just sold for $1.55 or whatever it was, is going to expire. And Kev, we might go out what, 2 weeks from that?
Yeah.
So
absolutely.
what? I'm just curious what that's trading for
Well,
now.
now these volatilities are probably a little
Little
high
high.
there too,
'Cause
so
they'll come
they'll
down.
come in a little bit. But
This is August
25, not that much.
Yeah.
They may come
No,
in,
yeah.
3, 4 points.
That's probably 21, 22.
But, yeah,
That's
down by
reasonable.
21.
So they'll be a little bit cheaper. But even if we went out to the 100 call, right now it's trading for $1.73. So let's take volatility down a little bit, maybe drop that to $1.50 for that call. That's still, again, that's another, well, maybe it'd be a little less than that, because we have to take 7 days off as well. So maybe that's trading for $1.30, something like that, $1.20, somewhere in that range. Could easily be trading in that range. And again, just think about that. And now you're bringing in another $1.20 for 2 more weeks, and your cost of the original trade is only 64 cents.
64 cents. So
And
we
that's
bring in
why-
another $1.20. Now we've gone positive.
Now you're actually
Now we've gone
you
to
have
a credit.
calendar spread out, and that's kind of where we want to go with this.
Right.
It's kind of
That was the, basis of this whole idea.
Mhm. So extending trade repair with duration, and that's what we've done here. And that's a perfect example of. Now we've done this with other trades as well, but again, that's why. And again, Kev, this is key as to why it's important when you follow along. So everyone is following along, learning these strategies, that you execute them. And again, you don't have to execute every trade we do in every group. I would say pick a group that interests you. You want to learn more about options on futures. Well, then follow us in the Thursday afternoon session. Follow each one of those trades. If you want to just, like what we're talking about on Tuesdays, that's the broad-based monthly income strategy, which has not been our best trade. I mean, that's the one that's probably, that's the one that hurt us, but everything else seems to be going pretty well. Our stock portfolios on Fridays, you want to follow that, that's fine too. But I would say if you're just going to pick one, I would say this option spotlight group that we do on Wednesdays, and of course we review on Fridays
Sure.
as well, is probably the one that's going to give you the chance to see a lot of different strategies and directional plays. Will involve earnings. This is stock repair. And we've done that several times. It wasn't Chipotle. Was Chipotle originally a stock repair, or was it just
Chipotle was based on, we did an earnings play. Yes, it started out as,
Yes, it was.
it wasn't really repair so much.
No,
We
we
put
just
some
added-
on, and then we put some on as a repair.
Right, so we bought 2 of the Jan 20s at 75, and then bought one at 56, and then we bought one later at 44.
Right.
So our average price is 62, and look where it is right now. Look at that, it's almost identical. We're almost exactly where we started.
And we're now
off.
through the strike.
Yeah.
441. Almost 44. Yeah, trading 441.
Look, our average price and the mark are identical, so we actually have a small gain on our original core position. That was the January of 2017, 400 calls. So we've broken even on it. But how many times have we sold out of the money calls since then? Oh, several times.
Yeah.
So Chipotle, same kind of thing. When you're looking at it, let's say 3,200, but don't be fooled. There's a lot more in that's not being shown. But the original core position from its inception is unchanged. So we're back to even. So that feels kind of good on that one, and all the other ones. Now, and I'll also remember. Oh yeah, it's right, 441. So right now, this call's value is 50 cents, even though it's trading for 10. It's trading for $10, $10.50. Its fair value is about $1, right? Because it's a 440 call. The stock is 441. So that call has $1 worth of intrinsic value, but it's trading for 10.5.
10 bucks.
10.5.
Oh,
so
that's
it is
painful.
So it is, but that's a lot of theta coming our way.
Yeah. In case I was feeling good about myself that I'm doing all these things right,
Okay.
Chipotle is telling me that not so much.
Oh, it's just turned into theta for us.
Yeah.
So let's see.
Mercy. Now look at the theta we're going to have on that.
Yeah, it's almost $100 a day.
$100 a day.
We'll be going into this P&L open number each day. Boom, 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 each day. So, interesting. Yeah, so stock has recovered to 440, so that's pretty interesting. PMG, it's come all the way back there. So we're okay with this one. 440 is kind of where we'd like to see it stay. Well, let's see what happens. Maybe it's had the news, the earnings are out, stock is recovered. Let's see what happens now. Now they kind of have to, decipher the numbers, see what's happening, and just kind of watch their sales going forward. So, it's had the spike, and I think we would have much rather seen it spike to 440, Kev, than to 360.
No,
For sure.
Remember, the pom-poms are still out for
Oh yeah.
for the upside. Even where it is right now, we still do better on the upside.
Right. Yeah. Oh, absolutely. Because look at we're still our delta for the whole position. Remember, when we come across the top, is 76.8. So we're the equivalent of long, or it's like we own 78 shares of Chipotle right now. So obviously, if we own 78 shares of Chipotle, we'd like to see it go up. For sure. No question about that. Okay. Well, good enough on that one, Kev. Any other questions coming in about that Apple trade? I know, going through these trades from the inception back on the 9th of June,
No, I mean, people get it.
Making sense?
I mean, yeah,
Are they
people
following
seem
along?
to, I think they're grasping. I mean, I think we went pretty slow and
Good,
methodical
good,
through it.
good.
Yeah,
I think-
no,
I know
everyone's on board.
Because
SLS is helping out there.
All right, thank you, SLS. But you know, the thing is, when you get to this level, if you're getting a good feel for this type of trade, right? This is calendar spreads and rolling calendar spreads. You're getting up to the level where, you know, you're getting a pretty comfortable, firm grasp on how options work and what a lot of people try to end up doing with them. So this whole concept of rolling your short calls that are maybe against a long-term core position, right? Remember, this whole thing started out by buying a 100 call that expired in October. And we did this back in the beginning of June. So, Kev, how many days did that have?
What?
June, July, August, September, October. It was a 4-month
Yeah.
time frame we were looking at.
That's right.
So we were thinking Apple going up, you know, maybe in 4 months. So the core was an October 21 expiration, 100 call. We said, listen, we're willing to pay $4.75, but we don't want to just sit here and hold this call
Right.
at a $4.75 call. Because look what happened, Kevin. If we just held that, if we just bought that call alone, because we were going,
Right.
we would have a loser.
We'd have a loser. Yeah, we'd be at about
would have a
$1.
loser. Because that call right now is worth $3.50. So
Yeah,
we would be
we'd be at about $1.20.
We'd be down $1,200.
Yep.
So what we said is we want to be long this call and hold it, you know, until October. But we want to finance it by selling out of the money calls with a much shorter time to expiration, so we can kind of chisel down the value of that $4.75 call. And we've done it. I mean, the first time was 50 cents, the second time 71 cents. Then we got
56, and then 49 we rolled, and then we covered that for 15, and now we're out to 155.
Right.
I've got it right
Okay.
here. We went from 425, then 47 cents to 378, 76 to 302, 49 to 253, and then we we did that down to 219, and then the 155 down to 64 cents.
Yeah. So yeah.
And if
you
I'm
take the
off by a
last-
couple pennies, forgive me.
if you take the last 155 and you've included that in there,
Right.
the net cost of this
Is 64
$4.75
cents.
call is 64 cents.
With a couple rolls to go, maybe.
And we're sitting here around 99.
Yeah.
So, I mean, I have to say, so
When
far.
this comes off,
so
we're going
good.
to have, if memory serves, we're going to have about 91, maybe about 77 days left.
Right.
It's a roll still.
Well, let's see what, you know, again, now the big, you know, don't forget, and obviously, earnings has a potential effect on this, right?
Well, that's one thing I was talking about in the chat was the risk. We still have risk on it. Make no mistake.
Okay, but how about AAPL? Sometimes when a chart doesn't come up, it's because you typed in the wrong symbol. Yeah, so like we said, it's still bullish. It would like to see after earnings the stock, you know, if the stock rallies goes a little bit lower here, Kev, going into earnings and kind of hangs around 98 or something like that, we're okay. But again, we're anticipating okay earnings, and if we do get a little bit of a pop on the stock, that's actually good. We'll take that pop. If it stays right where it is, we're okay with that. We don't want to see a huge drop in Apple, obviously, after earnings.
No, we don't want it to move away from the strike.
Yeah.
And it can a little, and we'd be fine. But we don't want a large move. Remember, when we had this on, Scott, in the last, days, it's gone to here.
Right. Oh yeah, 93.
While we had it on. So that's why we rolled it into a diagonal for two of the rolls. Where we sold the
Right.
98 and the 99 call.
Good point, Kev. Let's go back to the monitor page for a second, because you take a look at this. We have 1 minute, but
Yeah.
we
So
started.
it wasn't
with
always the
100
100.
calls, and then when the stock went down, then we went down to sell 99 calls, and then the stock went down again. We sold 98 calls.
Right, and that was part of the why we had to cover and and then look, we went from 98 to
Then we moved it
99
back
for
to 99
even
for
money.
even. Didn't cost us anything. We moved it back to the 99 call, and again this time, Kev, look, we're back to selling the 100 calls again.
Right.
So now it is a true calendar.
So we
again.
weren't inflexible with our strike price choices. We were lowering them
Right.
to bring in more premium and raising them up when the stock moved back up. Yeah.
Right. So when stock dropped to 93, 94, we had to come down to the 99, then the 98, then back to the 99. Now we're back to the 100s.
Right.
And when you're only rolling with 2 or 3 weeks out, it gives you the opportunity to do that. All right.
So we're going to wrap it up here for the swim lesson show for today. For Scott Connor, Kevin Hinks, we'll take a small break and we'll be back with our earnings show. So, and then back with the plunge. We'll see you in a few minutes, everybody.